A mega merger in pharmaceuticals. Ireland-based generic drug maker Actavis agreed to buy U.S. drug maker Forest Labs for $25 billion in cash and stock, combining two of the world's fastest-growing specialty drug makers and a possible harbinger of more mergers in the healthcare industry. Actavis CEO Paul Bizzarro spoke today about the changing environment in the industry and the need to control costs.
As our environment changes, the pharmaceutical space changes, one of the things we know we have to do is provide a broad range of product offerings to our customers, including branded products and high-quality generic products. That's going to be key. Cost containment is key. Hospitals are looking for cost containment, physicians are looking for cost containment, and the government is looking for cost containment. And I think we're well positioned now to be the leader in that space.
Shares of Forest Labs, best known for its anti-anxiety pill Lexapro and the Alzheimer's medication Namenda, shot up nearly 28%, while Actavis shares, which trade on the New York Stock Exchange, rose 5%.
Our guest tonight says today's big pharma deal could be a sign of what's to come in the healthcare sector. He's Rich Peterson, director with S&P Capital IQ. Rich, nice to see you. You heard our coverage of the Actavis deal, and with the CEO, they're saying that pharma space is changing. They have to be cost conscious when it comes to hospitals and insurers and all of that. As you look at this whole healthcare space, who are going to be the buyers and who are going to be the sellers?
Well, first, Susie, you look at the landscape for healthcare M&A. In 2013, there was less than $100 billion in announced transactions in the United States. That was the lowest number since 2004, according to our numbers from S&P Capital IQ. I think one part of the downturn of activity last year was concerned about what the impact was from the Affordable Care Act. Now we're seeing basically a pent-up of activity from deals that were deferred from last year. Obviously, the transaction today being the largest healthcare deal this year and the largest since Express Scripts acquired Medco for over $30 billion in July 2011, augurs well for the sector. I think the sector is seeing steady revenue growth. In the fourth quarter, their expectations are for double the S&P 500 norm for revenue growth, and earnings have been steadily rising, plus you have a lot of cash on the balance sheet. In terms of companies that are expected to make deals, Merck and Pfizer have talked about, shedding off some units that they feel are not growing as fast as they like. But in terms of companies, you have companies like Med Assets or Alliance Express areas that can, provide investor opportunities. But I think as a sector, as I said, we had slow growth in 2013 in terms of deal activity, and that should rise going in 2014.
Rich, Forest recently bought a company. I guess it's not just the drug makers, specialty, generic, whatever, that are going to be the buyers and sellers in this healthcare area. It's going to be the device makers, the healthcare management companies. It's broader than just drug companies, right?
Correct. I mean, not even talking about corporate sponsors. We also forget about private equity. In fact, earlier this year, the Carlyle Group purchased a unit from Johnson & Johnson for over $4 billion. And given the fact that the private equity firms have over $700 billion of dry powder that is unused capital, the healthcare sector could be one that they'll be increasingly looking as targets.
Mm-hmm. And are these going to be big deals? Oh, today's was a big deal. $25 billion is a lot of money, but are we going to see more smaller strategic deals, or are they going for big deals where, in this new landscape, bigger is better? Is that the case?
Well, I think, if you look over the numbers of transactions that occurred over the past 6 months, the average deal size is about $2.9 billion. So we're talking about the middle market of deal size, and instead of $25 billion is the biggest in over 2.5 years. So today's deal is really the exception rather than the rule. In some cases, companies look to acquire assets, divisions, units that are underperforming, or just trying to grow their footprint by buying companies that are privately held and not in the public marketplace.
30 seconds, Rich. In the drug space, is it being driven by pipeline concerns on these companies' parts?
Oh, and very much so. The fact is, you have concerns that you have expirations of patents, and the fact that there's pressure to grow opportunities. They have to look for new ventures. And the fact is, I said, with the new regulatory environment where companies and consumers are forced to look for cost savings, these companies are going to try to provide that.
All right, Rich, thanks so much. Rich Peterson with S&P Capital IQ.
Well, the Actavis acquisition of Forest Labs giving a boost to some other drug manufacturers today. Teva Pharmaceuticals, Mylan, Allergan, all seeing gains today.